to part 2 of the video. The first one was basic, some good general starting information. This is going to be more about strategy, and we're going to take a bit of a deeper dive into the charts and the way I see the market. So first off, I'm going to start with, I trade ICT concepts, Inner Circle Trader, SMC, Smart Money Concepts, whatever. So what you're first going to have to do, this video is going to be good. I'm going to give you the basics, and I'm going to give you the way I kind of interpret things. But then you're going to need to go to YouTube, and you're going to need to go to the Inner Circle Trader, playlists, 2024 mentorship. And there is 51 videos, and they are long. And if you really want the actual full education, you'll take the time to go through it that way. I'm going to first go over PD arrays, so that's, well, we'll get right into that. And then something about kind of just how to frame trade ideas, so like having a bias and a plan for targets, a draw on liquidity, stuff like that. The time ranges that are kind of used sometimes, and yeah, I'll just dive into it. I have a whole journal that is top to bottom pages, this many pages of information on ICT from the 2024 mentorship. And then there's stuff that's not taught in there that's in my brain. So I will try to keep this relatively short, but we'll see what happens. Anything can happen. Alright, let's see. Let's get started. We'll get started with some PD arrays. So the first one, basic, most common, most used, is going to be the fair value gap. This is the easiest to see also, and it's the easiest to define. Like, there's no questions about this. It just is or it isn't. Sometimes the order blocks can be, it depends. We'll get to the order blocks and you'll kind of understand what I'm saying. But the fair value gaps, like this right here, okay? If you, we'll zoom in even more, okay? So if you go to the middle of the screen, whoops, middle of the screen, you see how this wick right here, and I guess you need to know how candles form. So all candles are going to be OHLC. So my gray candles are the ones that go up, and my black candles are the ones that go down. So gray candles, they have the opening price on the bottom. The low is, you can barely see it, but there's a wick there. So the low, and then the high, and then the close. That's how all candles are going to form. They're going to be, let me see if I can grab a drawing tool to draw this here. Should prepare with that, sorry. What's the best tool here? Brush? I'll put it on my favorites for now. So all candles are going to start here, accumulate, manipulate, and distribute up. Okay. Terrible drawing, but you get the point, right? That's how candles move. So they're going to start here, manipulate, and distribute. Start here, manipulate, distribute. Start here, oops, start here, manipulate, distribute, and you can see it. But So that's scribbly rough idea, okay? Now, the fair value gap, there's gonna be a gap between the wicks. So think of it like somebody came in here and pushed strong. They did a strong push to cause price to move that fast, and now right here they're wanting to defend where they pushed, okay? So you can see how when it first comes up to it, there's some rejections away from it, right? Now it ends up getting crossed through, and then they play off this down here, which we'll go into later, and then it comes back up, crosses over it, and then takes off from there. So it doesn't hold for very long, but that's a fair value gap. Just so you can see, oops, fair value gap, boom, that's a fair value gap. Now this, that's also a fair value gap, okay? But when you see how this drags across, you can see how there's the fair value gaps are overlapping here. So now this one becomes an inverse fair value gap. This one's still a fair value gap, but because this price went down and up and down and up, this is now a balanced price range. So this whole area right here, it kind of starts right here because it goes down, up, down. Right here is all balanced, okay? So we're gonna draw, and this isn't exactly how you find these, but this is the concept. So this whole area is balanced, right? Because it's offering price down and up and down and up. Now if you draw this across, you can see how price is just automatically holding right there. You can see how this was 7:30, so this is an algorithmic time. And you can see how the 7:30 and 13:30 line up almost perfectly. You can see how price delivers back to midnight. There's a lot of things working in here just in this little tiny picture to learn off of. And we can go for days and days and days on the daily time frame. It all works in the same way, okay? So you'll see there's a fair value gap here, right? Now, what does price do? It uses that fair value gap and goes up. So that's what you're looking for. The fair value gaps will appear on every time frame, and then you want to watch how price interacts inside of them, okay? So when price comes into a fair value gap and the bodies, this is a higher time frame. I'm on the 15 minutes, so it's a little bit less precise. I'm just trying to get a lot shown in here, but here's a good one. On the smaller time frames, it's much more precise, but you can see here, we have that fair value gap here, and no bodies are even able to get in there. There's wicks that can get through it. Wicks can do the damage, but you would be looking for this fair value gap to hold price and send it higher. There's these equal highs here, there's these equal highs here. And how the market moves is it seeks engineered liquidity, clean levels, like this clean level, and it comes and attacks those clean levels. We got this all can be considered relative equal lows. It doesn't look like it on this time frame, but on the 1 hour, you can see it's like all relatively close together, right? So if you have this relative equal lows, okay, where does price come to? It takes it out just barely, but it does get through it. And then it sends it higher to the next relative equal highs. So you can see it's just moving from place to place. These relative equal highs, takes them out. relative equal lows, fails to take them out. Okay, but these are relatively equal, so we put it on there. It takes that one out. So, and then if you want to see, this is just, when you start seeing this stuff and playing around with it, like I can already tell you what's gonna happen here. And this isn't like, I don't even know if this was taught necessarily. Maybe it was. I don't know exactly where it was taught, but like, if you put the fib tool on this low to this low, right? Well, where does price stop here? Like, it takes this low out. It doesn't take this low out. Where does it get to? Oh, the 50%, which is the key level of all of this stuff. If you see, I have 0.5 daily order block, so this should look like this if I have all the levels drawn on it, but I only want to look at the midpoint because it's an order block, and that's how order blocks work. And this is a high time frame one, but you can see throughout the week major moves happened off it the whole time. So there's no arguing that this whole market is run by a computer program. It's all just an algorithmic computer program. And when you start seeing it like this, it's just mind-boggling and opens your eyes, and it's a whole new way to look at the market, and you have so many new opportunities created for yourself. Like, here's an order block at the top, and as soon as price gets back above it, it becomes a breaker block, and you see it's in line with that fair value gap that was created right there. Well, I would be willing to bet that the midpoint of this is very close to the midpoint of this. Okay. It's like, and where does it hit to the tick when it breaks through this? Like, that's not random. That's not like by chance. Look where these close exactly at that. Like, it's all just a computer program, and when you can see the market like this, it's almost like, feels like a cheat code, okay? And it's just a different way to look at things, because a lot of people are waiting for an indicator that's technically a lagging indicator, and this is stuff you're seeing in real time as it forms. Okay, so like I said, we have this order block here, and you can see price just respects that perfectly, right? And that was made at 8 in the morning. Okay, we go into the 5-minute, and like you see it even more clearly. You see it even more clearly how the bodies don't even get above the upper quadrant. So when you see these signatures, you divide these levels into fourths. So you have the fib tool, and see it's 1, 0.75, 0.5, 0.25, 0. And that's like, I use this tool for everything all the time, forever. Like sometimes I put a blue mark on there, or not a blue mark specifically, but I have, I have templates saved. As you can see, I have first fair value gap of the day, balanced price range, fair value gap, inverse fair value gap, new day opening gap, which I'm going to get to in a second, order block, I'm going to finish explaining. The first fair value gap, that's something that if you study it closer, you go to the 1-minute chart, you look for the first presented fair value gap of the day. So here, there's like a tiny one in here, but I'm just going to ignore that and focus on the more prominent one. And you can see, and I'll put the quadrants on it. You can see it just in the upper quadrant. So that's considered an institutional order flow entry drill. When it can only barely dip into a fair value gap, that's kind of like breaking through this junk and holding it above there. Now that's something that you kind of want to pay attention to. And then another thing to pay attention to is when you see really big wicks like this. Okay, so the wicks can do the damage, but wicks can also be looked at similar to gaps. So this wick right here, that's right at 9:30 open, so that's one to pay attention to. Okay, and look also where it touches at the top of it. It touches exactly at the top of one of my key levels. Okay, and so I draw the Fibonacci on it, and you're watching it. Price can reject it and head aggressively lower for sure. That's something that can totally happen. But if you see price gets to it and then closes above it, like this is something that when you start studying this stuff, you'll notice sometimes it'll get to something and then it'll open the next candle like right at the level or above it. That's because I'm most of the time trading micro NASDAQ, and there's a E-mini NASDAQ, which is the bigger contract, and sometimes they don't match up perfectly, but the algorithm's still sending levels to the same price, so it's just gonna do little stuff like that, right? But I bet if you look on the other contract, it's close to perfect. Anyways, that's just some like deeper thought insight that you don't really teach. You don't get taught that. You just see that eventually. Like eventually, when you study this enough, you're gonna see this stuff. Like from right here, I've been seeing this. I've been looking at this chart when I made the first video and seeing this all day. That big wick, I like you can eyeball the midpoint of it, right? And you can see the midpoint of this wick is like pretty much where these bodies are closing, right? I knew that that was gonna happen before I even drew that tool on there. Then I draw the tool on there and it confirms it. And you can see, oh, okay, it's holding the midpoint of that so perfectly, so clearly, so easily. Well, I guess I should probably get in this trade, right? Like, well, damn, it's holding it for here and here and here. Like, how many times is it gonna do it? It gets above it at 9:40, so 9:45 till 12 o'clock. It bounces there. Like, seems like it's pretty likely to go up, right? And you already get a move up to here, which if you look a little bit closer, there's some things that you could take profit at. So there's some order blocks. These both can be considered order blocks. And then this is like a balanced price range that eventually gets inversed. And then I guess I'm just going to look at it like this, like an inverse fair value gap. And then, so it's up originally, then it closes under, and then we never retest it after it closes under, right? So it closes under here, it tries to retest it but can't. So it comes up here, retests it finally, and like I said, you can use this as an order block and see that it hits that perfectly to the tick. But there's like a lot, once you start seeing the market like this, there's a lot of different ways, and you just got to give yourself a little bit of grace, because you know it's gonna hit something perfectly, right? You don't know exactly what it is all the time, but you'll train your eyes and start seeing where to look for stuff, because when you look at this, it makes this big price run down. Well, where's the likely last place of reference if it doesn't take this high out, right? Oh, it's not going to take this high out? Okay, there's probably a fair value gap in here that stops us. And then if you go to the 1 minute, like, the bodies hold at the midpoint almost perfectly. Same thing when we got to it here. See how the bodies hold to it perfectly? Okay, that's cool. And then you go here and you draw this little mini regular fair value gap, and what happens there? Same thing. Bodies flick through it. Like, it's just, this is all just repeating. This is on the 1 minute now, okay? So I went from the 15 to the 5 to the 1 minute, and it's all repeating still. It's all repeating. And then we can't get above it here. Come back down, back into that wick that we're holding above there. And then where do we go? We get above it, close above it. Same with here. We can't retest it right away. We just get through it. And then what do? We come back down and we retest it. We don't get body through it, but we retest it. Let's look at the 1 minute. What's the 1 minute do? Bodies hold right at it, right? Okay, let's go back to the 5 minute, and then let's draw this fair value gap. Where do the bodies hold? Up to the next thing. You know, it's just, you're gonna start seeing there's gonna be two PD arrays that price is holding between and bouncing between and referencing, and you just use those until you're done, basically. Like, I don't know. Yeah, okay, so, but that's like draw on liquidity, having a bias, plan for targets, fair value gaps, quadrants, kind of explained. Now I'll explain order blocks firmly. So an order block is going to be, oops, basically, like there's, because you're like, how do you know which one's an order block? How do you know what ones to use? Whatever. So like right here, right? See how we're going down, 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 and then there's an up candle, and then we go down, 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 down. Okay. So I would want to pay attention to this, because it's just kind of out of the blue, right? We're like, we're going up, we're going up, we're going up. There's a down close candle, we're going up, and then we come back. And so now I'd kind of want to pay attention maybe to this last up close candle, usually the last up close candle, but also it could be this. So let's just draw both of them together, right? And then that's where we reference later over there. So it's like that could be your order block, right? Or that could be your order block. However you want to look at it, right? There's, I mean, both are right, technically, if you look at it like that, right? Are either wrong? Not necessarily. So, and then there's another, like, okay, that we got this wick that sticks out here. Okay, let's pay attention to this wick. Where do these wicks, you know, like, oh, this wick refers to it. This wick refers to it. It's just little stuff like that that you're going to start noticing. You're going to start seeing it repeat over and over and over. Like right here, watch. This wick and this wick. See how uniform they are together? Well, watch where this wick hits. Are you getting the message yet? Have you seen it? Almost the midpoint, right? And then this hits the upper quadrant. And like, it's not always going to be perfect, right? Sometimes it'll be like, oh damn, that was to the tick perfection. That's pretty crazy to see, like these closes right there. And then sometimes it's gonna go through it a little bit, right? Like this is a key level 0000. That's midnight price. So midnight price is very important. You have coming over, we're just kind of building orders around it, and you would want to, if your bias is low, you'd want to try and get short above it or at it with stops slightly above it when it closes under, right? So it closes under here, comes down, comes back up and retests it. Well, what is it retesting? Is your eyes drawing to this stuff yet? Eventually it will start drawing to this stuff. What do we see on the run up? One random black candle. Let's draw on that random black candle. Look over, bam. Oh, bodies hold right at that order block, and then we come down. And then, I mean, you can draw this over, and we reference it later too, right? Like, where's the first target that we hit when we return back to these levels? That order block, and it holds it in the exact same way. Okay, well, I'm done here. Have a good night. I mean, this is all you should need to just go, like, stop watching this and just go watch the other shit. Or I guess I can keep going and keep dropping these gems. I don't know. I don't know what's easier for everybody involved. For me, it's for everybody who's watching this right now to text me and say, stop. Go do something else because we're going to learn from ICT. But I think some people, just like that I digested the information, can explain it clearly and easily already. So that's cool too. Whatever. I'll keep going. So so that was order blocks. I think you get that message. The order blocks are basically, it's going to be a candle opposite the flow of price action, that kind of will stick out to you. It'll stick out to you. Like right here, this sticks out to you. So maybe when it comes back, it'll refer to that one, you know, or more likely this one. But they're in the same spot. But it's basically like a way for the people in charge of this whole shit to give a reference point to come back to. And it's not them, somebody actively doing it. It's just the way the program works. So it kind of, it makes its run down, it hits a target, right? So it hits this target, and the move could be done. There's people that are gonna see this as support, like support and resistance. So they're gonna be buying it there, and so you know they can fake up, and there's gonna be more people that buy it because people are impatient and trying to get in early. And there's going to be people who already just have resting orders there. There's going to be people with stops trailed there, or whatever. So it's going to have some reaction. And then it'll come down and make people think, oh, it's breaking through that level. Cool, chase it. And then see how it rejects there. So it gives them even more confidence right at the market open. So more people are piling in, slammed. And we can go back and probably find what stops us. Okay, you don't want to believe that that's what stopped us. Okay. Let's look at this fair value gap right here. Hmm. But yeah, it's probably random. Like that fair value gap last Friday probably wasn't put there so we can manipulate up all week and make people feel all happy. Oh, this down move, it's been so brutal. Oh my gosh, we needed to go up. Oh, I've called this move from up here. So, well, I called this move from like here. I was like, we're gonna take out these highs, but not this all-time high. Everybody's gonna get all excited, thinking that we are, pile into it because we're gonna do it fast, and then slam down. Not right away, but eventually. I had a. This is the first presented daily fair value gap of 2024. So I think this will be a pretty key spot. Anyways, yeah, but this, as you can see, it's just congestion. There's not really anything that says we're gonna turn around. There's not anything that says we're not gonna turn around either, but I don't think, like, because this would be kind of where we would have stopped more likely if we were gonna turn around. We got through it, and now we've just been like kind of holding. If you put these two together, which you can do sometimes, that's in the teaching. We're just holding in that whole range, so I'm just waiting for it to continue lower, make an even farther move down, because it's built all this liquidity for, like, look, all that is just clean, ready for the attack. And what I told my friend at the end of last week was I would prefer for the week to close up, because we've had down, 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 down. We need an order block, right? So this is how you can start anticipating things sometimes when you get the flow for where things are moving. I believe that it's going to continue down. So when I see 3 or 4 down weeks in a row, I'm thinking we have to come up a little bit at some point to give people relief, because the way this whole thing works is most people aren't even managing their money, they're just hearing about it. So somebody's seeing this drop and the news is talking about it, and everybody's freaking out and panicking and calling their financial planners and advisors and telling them to sell their stuff and this and that. And if that happens, the thing will just crash, keep crashing, if everybody's panic selling. So they have to kind of like make it, oh, it's not, it's just a pullback. So they have to give some sort of relief for it. So that's where the order blocks come in. they're just kind of like a relief. So I was saying that I would like to see it close the week upward, and then potentially, because we have this untested new week opening gap, potentially see it flick one more time above 20,000, which I don't even think it has to. I think this blue box may hold us, but I could see it like coming above there and maybe taking out like these equal highs that they've engineered, and maybe coming into this new week opening gap and then slamming it down through there. And then we have more right here, these two relative equal lows, like see how they're 82 and 101. So these are pretty close. These are like 20 points apart. So I think we want to come attack that, and that's right above the first presented daily fair value gap. And here's something to just blow your mind a little bit. Oh, this changed. Wait a minute, hold on. It changed because I have B adjust on. Hold up here. Okay. Let me redraw this here. Oh, it's locked. Okay, so this is, yeah, see, because the contracts roll over, so they change sometimes. This is the first presented daily fair value gap of 2024. Okay, so see, we get above it, close, and then we're up here, right? Good month, whatever. And then all of a sudden, randomly, slam down. 1, 2. Up day. 1, 2, 3. Slam right into it. If we put quadrants on it, hits it, bam. Pretty weird, right? And then we launch up, and this whole thing, look how there's like just no down close candles. It's like barely. I remember trading this and just getting so frustrated because it felt so fake. It felt so fake. I was like, what is even going on? This is crap, this is crap, this is crap, this is crap. You can see there's like not even big wicks. It's just a straight run up, run up, run up, run up, run up. And then right here, this is Thursday the 11th, right? Here's Friday. And then they shot at Trump on on this weekend. Bam! Where does it come down to? Randomly. The exact middle of the first presented daily fair value gap of 2024, and then sends it to a new all-time high, right? So that's probably random, and we're probably not going to refer back to that point again. I would just be willing to bet that we're definitely not going back there. No way. We're probably just going to stop right here. This is the low, and we're going to make new all-time highs again. Not. Throw the Borat. Not. Yeah, definitely coming back down there. And then as soon as that happens, because 2024 felt so fake and so like engineered bull crap liquidity, that whole, the way order blocks work is as soon as the opening price of the down close candle is touched, the order block is confirmed. Okay, so right here we're up, we have our down close candle, and then we're watching this opening price. Okay, we're watching this opening price for this to touch that, confirm it as an order block, and then I'm going to draw it here with a small line. Hopefully this is the right tool. Okay, what day is that? 1/17. Okay, so as soon as that's closed over, look how we come refer back to that point and then launch up, right? Like, you can't really make this crap up here. That's, oh man. So here's the opening price of that day. And we refer back to it. I guess I drew this badly. Where did I even, oh, we referred back to it like multiple times. I'm actually gonna draw, hold on. I'm gonna just draw this whole candle. I'm gonna draw it two ways just so we can observe here. Okay, so there's the body is the order block and the whole thing is the order block. Let's look at it both. And this is also just how you study price like on your own. You don't have to, like, this is just being curious and wanting to learn and get better. So we got the order block. It touches right there, midpoint perfectly. Crazy. And that's the opening price is the 1. So as soon as it gets over it, I guess this is where the day close. Hold on, let me try and make sense of this here. Day closes. So the up day would be the 17th. The up day being the 17th would mean it opens here. Yeah. Okay, so that order block starts here. Sorry, I'm like getting all turned around. And then it just holds the top of it, comes back down, uses it, and sends it lower. You can see the midpoint uses it. But then it comes back up to it and holds the opening price, holds the opening price, holds the top of it. It leaves a massive new week opening gap through it. Then it comes back, holds the opening price, holds the opening price, comes back down to it, comes back down to it. Like, it uses that same order block for weeks and weeks and weeks and weeks and weeks and weeks and weeks. So basically, there's algorithmic reference points. I got a little sidetracked there. I was just trying to explain an order block, and then I got all carried away looking at them. But basically, there's, when you see an up close candle that's out of sync with the rhythm, so the rhythm is down, there's the last up close candle, that could be a potential order block. So for this to be confirmed as an order block, you watch the opening price. As soon as the opening price is hit, you would consider it an order block until the midpoint is breached. So even when it comes back up here, since there's no wicks through it, or since there's no bodies through it, you could still take a short off that order block down to here. That wouldn't be a bad trade, even though it seems to be against the flow, and it still clearly works. So you could still be wrong with the bias of the overall day and overall move and still win, because you're using really strong algorithmic reference points that are going to essentially take care of some movement for you. Some people are happy with a 20, 30 point move. So right here, that's 811 down to, I mean, basically right here is 20 points. So like just the wick is 20 points. I mean, and you're going to start seeing that. That's why I don't settle for small moves like that. Usually I'm able to get in somewhere right here. And like if I'm getting in right here, and my stop is right here, why am I taking profit right here when I see all of this? Right? Like I see this as a potential target. That's 300 points away, 400 points away. It didn't get all the way up there in one day, but But is it unrealistic to think that that's impossible? Like, has it done that in the past? Has it moved that far in the past from here to here? Yeah, it has. Recently. So to think it could go from here to here isn't insane. I don't shoot for that high of a target or that crazy of a target, but you never know, right? Like, so that's until proven otherwise. This is an order block, and bam, down there. And then you can see, like right here. So we're going up. We get this down close candle. We do get bodies that close under the midpoint, but they don't close outside of it. And they do just dip into this fair value gap with the wick, which we kind of mentioned. And this is considered a breaker block because it was the last up close candle in a series of down close candles, and then we got above it. So it broke, right? So it held once, and then it broke, and now it's a breaker block, and it's holding on the other side. So, and if you want to just ignore that one, you could just call this last down close candle. As soon as this gets touched, which it's touched right here, same deal, right? So there's a lot of, it's all your preference. You're gonna frame it how you want in your own head once you start learning the concepts and really seeing this stuff blend together. But that's an order block. The main point is you're watching the midpoint, which is the mean threshold, and when bodies start closing through that, it could be potentially failing. Same with the fair value gaps. The midpoint of that's called the what is the midpoint of the order block? Midpoint of the order block is the mean threshold. The fair value gaps, oh, it's the something equilibrium, CE, whatever. It doesn't matter. This, like, some of these terms, like, you don't need to know the exact term. Like a fair value gap that goes up, I'm telling you that it's a fair value gap. When you're gonna learn it from the actual like creator of this stuff, it's a buy side imbalance, sell side inefficiency. There's down close order blocks that are sell side imbalance, buy side inefficiencies, and it's just the way that this stuff is it's the way the orders are matched and placed, and if there's an inefficiency in upward delivery, it needs to be balanced. So the market's whole goal is to maintain a balanced price. That's why you see it balancing price and then moving away, and then balancing price and moving away. So those are key things to pay attention to. Order blocks. I guess this first lesson is going to be, well, this first lesson is going to be the only lesson. Everything else you can learn in the videos. This has been so much of a masterclass that if you just watch this and take your time in the charts seriously and study and just go through multiple days and days and days and days and days the way I've done it right now, you're going to eventually see, like, okay, now I know what a fair value gap is. Now I go study a bunch of fair value gaps, and then eventually you're going to train your brain and your eyes to start just, you're going to see it in real time. It's just, there's steps to it. You're not going to watch one video and be like, okay, cool, let me go trade tomorrow and make a bunch of money. Like, it doesn't work like that. I mess up a lot still. This is all a learning process. No one's perfect. You're not a robot. So just give yourself grace and time, and the more time that you spend looking around for it like this, like I said, there's certain times where I can like see it sticking out, and then I'm like about to draw these quadrants on something, and I already know that it's balancing off the midpoint, right? Like I didn't need to draw that to know that, but then when you draw it, it helps your eyes confirm it, and then it's easier to see it without drawing it, right? Like right here, well, I can eyeball the midpoint of that candle, right? And if I can eyeball the midpoint of that candle, and you see the way my cursor is, like it's still giving me the line. So if I'm eyeballing the midpoint of this candle and I see that my cursor is clearly, like, there's not bodies going under it, well, do I need to draw the thing? No, I don't, right? But then when I draw it, it's like, oh, okay, that confirms it. And then I draw it like this, and it's like, okay, now I just have it labeled easily, and then I can remove this, and now I know that I'm just looking for an entry somewhere in the upper quadrant to the midpoint with my stop under this. And it's that simple. And you just repeat that. And then there's certain key times and key ranges that you're going to be studying and looking for. So you see this 7:30, 13:30, midnight. Those are some of them. One thing is like there's the opening range gap. So there's the opening range gap, the midnight opening range, the PM opening range. There's a lot of different things, and basically I'll just kind of give a couple examples here. So here's the regular trading hour gap. Okay, so you see when I turn that, the price stops at 16 and starts at 19:30, or at 9:30, excuse me. So it doesn't show the overnight movement. Okay, so one of the lessons was, and this was taught very early in the 2024, and this was like, hey, if you need a model that you can make money off of, a model is basically like a play in a playbook. If you need something that you can make money off of, here's one that you can take that is high probability. Basically 70% of the time you're going to see this 50% of the RTH gap hit in the first 30 minutes of the day. So it's not in the first 30 minutes of the day here, but you can see it's hit, and then the top of the gap is used later. You can see the quadrants used later, and that's just one of them. Okay. Now I'm gonna go. I don't use that one as much. I prefer, like, there's the 12 to 5. So you take the high between 12 a.m. and 5 a.m. and put these quadrants on it. Okay, and you can see where does price refer back to. So it comes down. First it comes down, and then this. So let me draw it like 12 to 5. Okay. So that's the gap, right? And you can see it builds on the top half, and then as soon as it closes under, displaces under, leaving a fair value gap there, comes back to the midpoint and drops. And then it comes back to the lower quadrant, drops. Comes back, gets above, holds there, balances on the mid, and hits the top almost perfectly. Now we're going to show standard deviations. So you see I have all these like negative numbers, right? So this is the range, and then these are standard deviation projections. Okay, so if you look on the right side, you see something flashing. Well, look at the -1 standard deviation off of that range is almost the bottom of the move. Okay, so you have that, and this is all stuff you just play around with. Okay, so you have that. You have the bond opening range, so that's 8 to 9 a.m. Same thing, 8 to 9 a.m. Put that on there. Comes down through it. Let's see how far it goes through it. 0.25, 0.5, right? And then you're gonna hit the reverse. And where does it go? Bam. Oops. That can be used as a target, right? And these aren't exact projections, but sometimes they are. Like I was looking at this one earlier. This is the opening range, 9:30 to 10 o'clock. This one was crazy. So look how it holds there. Go on the 5-minute. Holds there, holds there. Now watch when I put the standard deviations. The high of the day, the high of this move, the low of that range, perfectly almost. So once you see this repeatedly over and over and over, well, you just want to study it and then train your eyes to see it all the time and then use it and make money. It's pretty much as simple as that. You need to have a bias or a draw where you think the direction is headed. Somewhat like, you just kind of look at it, the way I look at it is like a magnet, right? So we have these equal highs. That would be my magnet right here. Where does price come? To the magnet. We have these equal lows. Where does price come? To the magnet. Right? So like you can use a lot of things as magnets. You could use the daily order block midpoint. There's a magnet. Settlement new week opening gap. That's something, there's the new week opening gap. So if you go, they did the rollover this week. I freaking hate that. So here's the settlement new week opening gap. So see, I have SET on the bottom. See how the gaps are different? We'll see it's just a tiny gap. That's fine. But I wanted the bigger one. And looks to me like I picked the right one. Yeah, the other one still works, but it's just going to be a tiny one right here, which, if it gets on the other side of it, you're going to be questioning. And this is just something, he didn't teach that in any of the videos. That was just me being observant and studying and playing in the charts and spending time on this. That's what you'll get. You'll find your own little things that you notice and that you weren't taught when you spend genuine time and effort on this. So the new day opening gap is going to be right here. We closed, and then wherever we open is going to be a little small gap. Sometimes they're small, sometimes they're big. So right here, where is it? So yeah, right here it was really a small one. And you can see it, they're overlapping candles. So it closed here, and then it opened here. So this is it. And as you can see, when it's small, you can kind of start to question it. But once it gets under it here, look where it refers to it again and then comes down pretty hard. And then same thing, it stops right there exactly. So it's going to be used, but you don't necessarily need it because there's other things like I said, pay attention to wicks that stick out. So there's that wick. That's considered a rejection block. Wick can be your target too, right? So there's a lot of ways to skin a cat, right? Isn't that what the saying is? So you want to have a draw on liquidity, so a bias, plan for your target, a way to get in, so a PD array that you're using to get in, where you want to stop out, which is essentially when that PD array gets invalidated, and then just patience, making sure you're not doing too much, paying attention to the time, knowing that there's certain times when you should avoid trading and when you should pay attention to trading. Something that's taught in the ICT stuff is macros. Every last 10 minutes and beginning 10 minutes of every hour is a macro, so you can expect price to move during those times. See, it's 11:50 to 10:20, or 11:50 to 12:10, excuse me. And you see, here's 11:50. to 12.10. And what does price do in that time? It runs up almost 150 points. Same here, right? What's this? Look at the bottom. 1550 to 1610. What does it do? It runs up almost 150 points. Sorry, Travis. Almost done, buddy. So, and then you see it goes to a new day opening gap. From a settlement, new week opening gap, daily order block, new day opening gap. Just repeating, not patterns, but patterns. I don't know what a bear flag is or a bull flag or any of that bullshit, but I do know how to win, and this is the way to do it. That's all. Study up. Leave questions if you have them. Text me questions if you have them. And this was good information for you folks. Good starter, basic ICT for Dummies info. If you want the full rundown, you have to study the material from the man himself. And I think what I shared in this video is enough to get you started. You can take what I've shared in this video and go spend a bunch of time in the charts and contact me and be in touch and be knowledgeable and thoughtful. And you're going to end up having success. Don't expect it in a month. Don't expect it in 3 months. Don't expect it in 6 months. Don't expect it in any amount of time. Be surprised and happy and grateful and shout out to God and whoever you believe in whenever that time comes. Give yourself praise, be gracious to yourself, be kind to yourself, and enjoy the journey. It's fun, and like I said in the last video, it can change your life. So do the work and let it happen. God bless. I love you if you're watching this, and have a great rest of your whatever day that you spend.